Well, here we're looking at the Dow, and we saw a very dramatic move, a continuation from this action from the prior day. You could see the importance of this range. You had one day it was the close, it was the close for the next day, and it was our open on the day, and we never saw any extended move there, just a continuation here. So it really kind of tipped the hat that we were going to see a pretty good continuation here. I think this was just between this and the S&P, this was like a no-brainer to make a lot of money on the downside on options today, and play the incredible swings there, and especially after you see the break in the violation through the pivot low, and so we really did see the acceleration there, which I felt we could do, especially if we started seeing the violations of our prior range and didn't see any commitment to the upside, which we didn't see right off the open. You could tell that there was no commitment, so it really gave a lot of opportunity, I think. Sometimes, a lot of times it's easy to get critical and say, well, you know what, yes, it could go either way. What is he saying? But what people need to realize is that yes, what you're looking for is the commitment of the market and or the lack thereof. When you see this, where you're seeing this close, and then you see the prior close, you see several closes here, it makes sense that the rule that test that has to happen is the break over this range, and it couldn't do it. So right off the open, you're seeing a pre-bid that was very, very dramatic to the downside. So it told you, hey, guess what? We're going to really sell off hard, and we're gonna continue for a while until we can try to work this out, or it just becomes just so oversold that we need to snap. It snaps back, but as it snaps back, traders need to watch for the potential for this to start to weaken up too. So let's look at this just on the short term, and we'll see where we're looking at here. I think it makes sense if we're just drawing our, say, our retracement levels here. We'll take our retracement lines from the main swing high, and we know here that anything toward this 16,600 would be, very aggressive, and very, could be a little overextended in hopes that yeah, you might not ever see that. That's if everybody gets very, very excited about the market. I don't see that happening so much, as opposed to maybe a move to 16,400, 16,350 maybe, and then prices start to swing low again. But that's still a pretty good move. That's about 150 points if it can muster that kind of energy right here. I still would be very apprehensive of playing long overnight, and trying to get, try to play the long position, unless you really, really are great on your entry here, like came in the lows here and just could have waited for today's follow through, and then watch for any weakness setting in the afternoon. So I do think as you watch this on the intraday, you're seeing look at this dramatic open here, very, very dramatic. You see the correction. You see the divergence again as it tries to start to create here. You see the 1, 2, 3, 4, 5, and now you start to see this trying to come back, but didn't break the prior highs here at 16,200. So of course, what's your main target for tomorrow that has to break? Has to break through that 16,200 for you to think, hey, you know what? We could see a move to 16,350 or 16,400. This is the way you want to kind of give yourself these impressions. Otherwise, what the best way to take care of this and try to think of it in the short term trade is to kind of come into these retracement lines. Let me just get this again one more time, is just draw your retracement lines on here. I know everybody talks about this and then thinks it's somewhat simple or whatever. I think it's more than important here. It's vital to do these things, because you get a feel right here as you start to see this. This makes sense that this could just be a reactionary move back there. You see it doesn't break the prior high here and doesn't continue. So now here's your 50% retracement. So you have to see that break above these ranges to really justify, and then you see, and it makes sense. If we start to see the break past this, then that's your level where it needs to kind of hold. Otherwise, you're going to see continued, continued break. So watch for this, and maybe a move back to the 16,000 level, because I just think it's a very bearish overtone, and although it's had a very nice recovery, I anticipate some potential recovery there. I am more bearish on the overall market than I am optimistic that we're overextended. I just think that there was a nice little bounce back off the day today. There's some not so great announcements. I think that people could get fearful again, but that doesn't mean you couldn't see a little more upside here. I would just watch for the commitment, and I wouldn't want to stick myself out there too much unless I was really confident that I was doing something on an intraday basis, or that we were seeing a little more commitment over a longer time frame. Keep in mind, this has only been really an hour and a half action to the upside of a recovery. Other than that, we've been hours and days of decline. So got to put it in perspective here.